are dividends payable. I am Anna Kerkhoff.
I'm Kneller.
I'm Kirby, Knipp.
I'm Ariel, Kinnear.
I'm James Kocen.
I'm Kyrie, Killen. Facebook is the largest social networking website with an educational focus. It makes it easy to connect with family and friends via the internet. Facebook is accessible worldwide. In February 2004, Mark Zuckerberg launched the Facebook at Harvard University for students to connect. August 2005, it became what we know it as today, Facebook.com, after the web address was purchased for $200,000. As of September 2006, the network broke out of just catering to educational institutions and made it possible for anyone with a valid email address to join.
Looking at Facebook's balance sheet from 2014, their current assets totaled $13,670,000,000. Their allowance for bad debts was $39 million, which is up from $38 million the previous year. Their total revenue was also up $600 million versus their previous year. Their intangible assets counted for $3,929,000,000, and their current liabilities were $1,424,000,000. Two categories of current liabilities include accounts payable, which made up for $176 million, and deferred revenue and deposits, which made up for $66 million of that total number. The previous year, current liabilities were $1,100,000,000. These amounts could have increased just as a result of Facebook being a growing company and having more money flowing through. In this case, current liabilities aren't an indicator of Facebook losing money because their revenue is increasing at a greater rate.
Okay. In regards to long-term debt, in August 2013, Facebook entered a 5-year senior unsecured credit facility that allows them to borrow up to $6.5 billion to fund their working capital. Facebook identified their stockholders' equity to be $36,096 million. Facebook identified their retained earnings to be $6,099 million, and retained earnings represents the percentage of net earnings not paid out by dividends.
Facebook uses the generally accepted accounting principles, so they follow the GAAP that we talked about in class. So all of their accounting principles follow those guidelines, and one that we thought was pretty relevant to class was their allowance for doubtful accounts. And we thought this was interesting because even with a company as big as Facebook, it doesn't matter, they still have to account for allowance for bad debts. They did this by the same process that we talked about in class, but they also take into situational factors that we didn't really cover in class, just like the consumer's income and history of payments.
Their property and equipment is stated at cost less accumulated depreciation. Their depreciation is computed using the straight line method. In class, we discussed the straight line method of depreciation. It's used to allocate costs equally over the life of the asset, and the rate stays the same each year. I found it interesting that Facebook chooses to use straight line method instead of the accelerated method.
In their notes, Facebook states that their property and equipment is stated at the cost less depreciation, and they value their depreciation using the straight line method over the estimated useful life of the asset or the remaining lease term. And when it comes to their capital lease equipment, they use whichever is shorter, most likely for tax purposes. When it comes to their goodwill and intangible assets, their goodwill is valued in 2013 at $834 million, and in 2014 it increased to $17,980 million, which is a total increase of $17,150 million. For their property and equipment, in 2013 it was valued at $2,882 million, and in 2014 at $3,967 million.
Three of the notes to the financial statements could be classified as being non-current liabilities: long-term debt, stockholders' equity, and commitments and contingencies. In the note on long-term debt, Facebook mentions that they have entered into a 5-year senior unsecured revolving credit facility in August of 2013. This allows them to borrow up to $6.5 billion to fund working capital and general corporate purposes. They have until August of 2018 to pay back. In the note on stockholders' equity, the initial public offering of shares of a common stock is mentioned, as well as the follow-on offering. Common stock, Class A and Class B, are discussed. Under the notes on commitments and contingencies, leases are categorized as the commitments, and legal matters are categorized under contingencies, which, as we discussed in class, can be considered non-current liabilities.